Hello, everyone. Welcome back to the Prospero.Ai stock market live stream. We have so much to discuss today. Obviously, the volatility in the market has hit levels that we've only seen 3 times in history, with the VIX reaching over 60 this morning before the market has slightly rebounded as the day has progressed. But the VIX reached levels that has only been reached during the global financial crisis and the COVID crash of 2020, and it's at the highest level since 2020. So obviously, everybody is on thin ice with their portfolios, probably thanking our lucky stars that the market opened up today instead of continuing lower. The big gap down today in the QQQ was at over 5% at one point. A lot of the fears going on around the market is that the USA economy is about to hit or is in or about to be in a recession after recent weak readings of economic data, which recently in the past months and year or so have been good for the market when we've gotten weak economic data. But the environment has recently shifted where bad news is now bad news again. And the Fed is going to possibly be having more rate cuts more quickly than the market was even anticipating. There's talks of a emergency Fed meeting where they will cut rates early. So much to discuss going on with the market today. If you're a longtime viewer, please like the video as we start to stream. We have a lot of good topics and a lot of useful information we'll be sharing today. One of those being the SOM rule, which was triggered on Friday with the weak economic data we got. I'll let you know what that rule is and what it means for the market. I'll just share this with you. It is bearish, so maybe that's what part of the reason we saw the markets open up so much lower today. Obviously, the VIX, which I mentioned already, being at the highest levels since the global financial crisis and the COVID crash. Pretty insane to see how quickly the market has spiraled lower. Obviously, the QQQ net option sentiment was at 0 2 days last week, so it was hinting at some pretty volatile times ahead, but I don't think anybody expected this. Obviously, I think part of the reason that the USA stock market is performing so badly is that Japan is actually going through really difficult times themselves. The Nikkei 225 index was down 12% today, which was the biggest single day drop since 1987 for that index, which is just staggering to hear. And then we're just layering and layering bearish stories one on top of the other today. We had Warren Buffett, the king of stocks, king of finance, so well respected, Oracle of Omaha, selling 50% of his Apple position, which I think there's a lot of minutia and detail to talk about that story, because when you hear him selling billions and billions of dollars at Apple, cutting his position by 50%, it just cannot be taken positively. But Apple had ballooned to becoming almost half of the Berkshire Hathaway portfolio. So he still has a massive position in Apple. So I think there's a lot of angles to cover on that story. Hey, George, how you doing on this red Monday morning?
Good. The portfolio is doing good, so I'm happy.
Yeah, I
We
can't wait.
we were ready.
Yeah, I can't wait to discuss all the moves that Prospero Signals led us to making. But after this Warren Buffett story, we have a story about Elon Musk possibly joining the Trump cabinet. Not really, but leading a government efficiency commission. We'll talk about what that means for Tesla. And Elon is just a man who just keeps adding things onto his to-do list. Obviously, if you watch these live streams, you've heard us talk about NVIDIA and the AI trade and boom that's been going on. NVIDIA dipped below 100 this morning. I think throughout the day today, it might have popped back above that level, significant psychological level. But we'll talk about the landscape of AI after the weekend we saw all of those stocks open up well lower. Another thing that we haven't mentioned recently, but we've been in a period of yield curve inversion for the past 2 years. And just today, the yield curve uninverted, ending the longest streak of inversion in history. We'll talk about what that means for the economy and the stock market. Has a lot to do with the Fed and their rate path coming ahead and how people feel about the economy and possible recession. And last but not least, we have the so-called digital gold. Didn't seem that way this morning and last night, actually, when all the stock markets were closed. Crypto was crashing. Ethereum was down over 25% at one point. Bitcoin was down 28% in a week. So, how should crypto enthusiasts and investors feel about that with all of the volatility that we are seeing in the market? I think, George, we should start talking about the model portfolio and how you were able to survive the bloodbath of the market that we saw this morning open up as.
Yeah, I mean, I was looking at it as it was unfolding, and I was like, is this like disaster territory? Should I like, should I just start getting out of everything? But you always have to give these things time, and we did see some signs of a correction on Friday. Like especially what we saw is like we didn't short, Wolf or ON, semiconductor plays that we've had. We got out of those, and those have actually done pretty well today. So we actually, there's certain things I think, especially where things that have been hit hard already, that we saw a lot of volatility last week, and if we didn't see good, we talked about this. If we didn't see good, AMD earnings, if we didn't see chips kind of continue on the path that they've been on, we might have a different attitude. But the bottom line is, I think there's a lot of macro fears, and macro fears can end up hitting everything. But earnings always do well, even in bad macro environments, if companies are beating earnings. So we still, and we made this a big part of our newsletter this weekend, we still think that chips stocks, even if the broader AI market, the chip stocks as it relates to AI, we still think that they'll be doing well if there's anything to buy. And we did see SMCI, especially the one chip stock we have in our investing portfolio, tear back from like down 14% at one point, I think, to down, close to 4% at one point. I think it's pulled off that a little bit. So we are seeing signs of resilience in the market, but we're obviously also seeing very low QQQ and SPY net option sentiment. And that's, reason to be cautious. I mean, we had 9 bear picks and 6 bull picks this week. And I think that's the first time since earlier in the year, like way early in the year, maybe even last year, since we've had more bear picks than bull picks. So obviously we were feeling nervous even before, the pre-market craziness started and the market started tanking. But there are signs of resilience. So, especially when we do the model portfolio, I think we're going to be, looking at the current state of the market and how we want to pull things. But like, yeah, right now, I think there's just too much macro fear and too much like, legitimate macro economic data that we've seen that has come in not so good. That is reasons to be highly cautious right now.
Yeah, so a crazy stat that I saw is this earnings season, 78% of companies that have reported have actually beaten their expectations, which you would not expect probably with the way the market has been the last couple of days. I think one of the major reasons the market was getting so nervous over the weekend was the weak economic data we got on Friday, and obviously the market was down on Friday as well. But there's a rule called the SOM rule, which was triggered, which is when the 3-month moving average of U.S. unemployment rate is at least half a percentage point higher than the 12-month low. And I think a lot of people are really starting to get concerned that the Fed is keeping rates too high for too long, that the economy is either in a recession or about to enter one. How are you feeling about the economy and the business landscape right now? Has the Fed waited too long?
Well, I think we just saw Japan raise rates, and that's another thing that has made people react. So I think that combination is a big fear, right? That people think that we might still have like a lot of pain coming from, not cutting rates. And that there's still enough inflation around that Japan's concerned enough to raise rates. I think that's showing, I think there's been stagflation fears, which is obviously persistent inflation as well as economic stagnation. So I think that's the biggest fear, right? Because Powell actually, it wasn't until he made this point about 16 times that I was like, oh yeah, I do, like, that I kind of forgot. I mean, I knew this, but we've been having problems with inflation for so long that the Fed has a dual mandate, a good jobs market and, low inflation, right? So I think if anywhere in the world is kind of experiencing sticky inflation and then starting to see economic problems, that's going to give, you know, everyone fears. So I think that, I mean, I think especially as this is played out, I'm kind of sitting and wondering, like, and I don't know if Powell knew that this reading on Friday was coming, perhaps they would have made a better choice. But I think this is the one thing that I'm starting to question. That I like in recent memory, that I'm wondering if Powell really did the wrong thing. And I think maybe they should have, with this data that's come out and the way the market's been affected, maybe they should have cut rates at this most recent meeting, because this is a definite sign, especially with jobs being so weak and the number um, that you mentioned. I think I think not only do we start to get um, potentially some really bad economic data coming through the pipe, we also are going to get that market fear that it's really that's not the Fed's official job, but it kind of is their job to make sure that there isn't fear in the market. Um, and yeah, I mean, I think the good sign is the way the market came back this morning. That means that there might be panic, but to your point about earnings, there isn't necessarily the value story yet that says the market should be valued lower than it is. And you always have to look at the difference between price and value, right? So I think that companies continuing to do well in earnings can stave this off, but I think there's clearly a lot of fear. We wrote about this in the newsletter. I think part of that fear is geopolitical. I think we're getting all this talk that Iran is going to make a strike against Israel. Um, Although the missiles that they launched the first time didn't exactly do very much damage. Then I think we have concern over the election, uncertainty over the election, and the way that I think especially the Republican side is like painting a doomsday scenario for crypto and the markets if the Democrats win again, which is, I think a little overblown given the fact that the market has done very well. It's one of the things that you can point to, that the market has done well in the last few years, especially, or I should say year. But I think that there's just uncertainty right now, and that's very hard for the market to deal with. And I think we're going to need. I think we talked about, like, we didn't push the panic button, and I'm actually feeling pretty smart about writing it this way. In the morning, I was like, oh, should I have taken a much more bearish tone? But I mainly talked about volatility, and the way it's come back has made me happy that I talked about volatility instead of straight bearishness, because it is yo-yoing a lot, especially the way it looked at last week. And yeah, that's the main reason I talked about volatility, is because especially I think with, chip stocks, Meta posted good earnings. I do think that earnings will still paint a pretty good picture of the economy. It's just a question of how much panic is going to be interjected into it.
So, speaking to the volatility, the uncertainty, the fear in the markets, you've been an investor through probably the worst economic and stock market time in history, the global financial crisis. The COVID crash was really bad. I don't know if you'd want to call this a crash or just a pullback, or I don't know how you'd want to consider this yet, or if we're on the road to it becoming a crash. Can you compare the feeling in the market now to the prior times? And do you foresee any kind of black swan event that makes this really, really bad? Or is this kind of just a normal market function still? Or are we seeing something bigger brewing here?
I mean, right now we have to treat it as like a normal market correction. It's been boom times. Uh, and I do think, one thing that we mentioned in our letter, Trump kind of speaking out again, the way he spoke out and the reaction from chip stocks. I do think that's part of it. I think people have to be very defensive. You can't really get too bullish on anything when there's clearly a force in the market that, you know, would benefit in it doing badly leading up to the election. And I think we're being very delicate about how we talk about it. But I think, it's very clear that he's already said something that hurt the market, and he would benefit from the market being further hurt. And I think you could also reasonably assume that he knew what he said about Taiwan would not be well received by the market. I think we can say all those things pretty conclusively. So I think that's another thing making people nervous, that, I don't think either side is above, using the market, manipulate it, pushing the market in directions that would benefit them and make them look better. So I think that that's one of the things that we're expecting, something that's highly volatile. Like, I could potentially see a bigger rate cut, like instead of 0.25, 0.5 in September, if we're seeing a lot of trouble in the market, which I think would really rally the market if it's having problems. Like, I don't think we're there yet. You mentioned an emergency rate cut. I think I think it's so recent to the meeting that they wouldn't do that, but I don't think that's off the table if the market is seeing way too much fear. So I think that makes it tough, and we won't be betting too hard. We're going to probably stay net bearish for the foreseeable future until at least we see SPY and QQQ net option sentiment rallying. But even I just took a look, like SMCI is on the verge of going green after being 14% down. That's absolutely insane. I don't think
Yes.
I don't think I've ever seen a stock that's down 14% pre-market without any earnings event, without any news event, like potentially going green, or even the run it's gone on already is nuts.
And that speaks to your newsletter and how you mentioned you called it volatility versus just straight bearishness. One of the things I wanted to mention on the stream today was the VIX hit 68 in the pre-market, which was up over 70%. And the VIX is a measure of volatility in the markets. That was the highest level, and why I mentioned the global financial crisis and COVID crash before, because it was the third highest level ever behind those two, which makes me nervous about what maybe the smartest people in the market are seeing and what's to come and unfold. But I've also heard and read about some investors saying that the VIX can never maintain such high levels, so it's almost always a good idea to short the VIX when it's this high over a long period of time. Do you have any opinion on that? And what do you think of the VIX hitting the third highest level in the history of the stock market today?
Oh, uh, I discourage people from trading options all the time, and I think trading the VIX is a close cousin. At least you're not at least you don't have the same buying puts and calls where it's easy for you to go to zero. So I think going long or short the VIX is still better than options, but you've got to be a pretty advanced mind in the markets to understand that kind of trade. So I wouldn't really advise it. In terms of just I think in those previous times, like I said, I think there was a lot more there's an uncertain bearish future, but there's not to your point, there's not a real estate crisis or a tech bubble or an obvious. Both of those things were clear overvaluations of assets, right? And here we are sitting at these companies beating earnings expectations, right, at a 78% clip. That's not showing overvalue in the market, and I think that's why I'm less nervous about that. And then there's also kind of the long term, I think we know pretty conclusively the way it's adding up and the way that it wants it to go, that the market is going to do well if Trump wins. So we're not even talking about we're talking about an outcome that's better than 50-50 at this point, that's going to rally the market. So I don't think it's the same. I really don't think it's the same type of setup, but I think that was more bear markets are volatile, right? Because they do have swings, violent swings in each direction as the values are figuring out. And I do think we could have the violent swings, but I don't think I just don't think we have the same kind of bottom right now profile, especially after this morning, that I've seen in those other areas.
So I think last Monday we talked about some of the stocks were down, and I asked you like, is it time to invest in some of the mega cap tech? And you said, I think it's not the time. It's going to be very volatile until the election. Now that we've had an even bigger pullback, even though we still expect volatility, does the risk reward start to become better for these stocks that have gotten hit hard, that are great companies like Amazon, Meta, Google, all those ones, where you would suggest start nibbling in those?
So I think there's a reason, and we're going to talk about Buffett a little bit later, that you go to cash. I think if you think it might be near what the bottom will be, like you buy here, you buy lower than that. I don't think by any means you should be, if you've gotten out, right? Or if you have cash, I think your cash should be on the sidelines now, unless you're prepared to short things too, which only if it's near comfort zone. But otherwise, cash that's on the sidelines, cash that you normally put in the market, I just hold. And if you want to buy little bits of Nvidia or whatever your favorite stock, because you're like, it's going down, I'm prepared to buy more if it goes down another 20%. I think that's the right approach. I don't think now's the time to throw all back in. I think if we are seeing a bear turn, if we are seeing rough economic circumstances, this isn't the bottom. I just think it's going to be too volatile right now for anyone, for anyone to know. And like, I could easily, like I'm saying, I could easily see a scenario where we're, down 15% from here, then up 25, then down, that we're just like going back and forth, and it's very hard and it's challenging to hold stocks in that environment, especially if you're long only. And then, Trump could win, and then he's basically setting up a situation where it would, boom, because everyone's like, because he's, a professed friend of the market. And again, I don't think the Democrats are not friends. I just think I just think that's the kind of the way that it's being set up. That he's basically saying he's going to do a lot more for the market than the Democrats are saying explicitly. But the Democrats tend to do a lot for the market too. But Kamala's not really saying anything right now. So who really even knows? So I definitely think in that scenario, we might not be going down that much further, but due to the volatility, unless you're like an experienced trader, I think it's worthwhile just like letting this shake out, taking safer predictions, going long short, or if you don't go long short, or at least being willing to buy some SQQQ to hedge, then I think you are better off in, leaving some cash on the sidelines now.
So one of the markets that I was seeing that was just getting crushed even worse than the US stock market was the Japanese stock market. They were down 12% today alone, the worst day since 1987. Do you think if there's global uncertainty with, you mentioned possible war escalation or recession globally, that people will come to the US as the strongest economy and with the best businesses, and that could kind of provide almost like a safe haven effect for the USA stocks?
Yeah, I think that's one of the reasons that in kind of global economic uncertainty, that you know people kind of all over the world, whether it be like real estate, and not necessarily just in America, but real estate in like stable markets that they know are solid, um, or some of like the best oldest American companies that pay dividends. Those become like a lot more attractive investments relative to like as we said, like Japan is very like what's going on in Japan is very concerning. Now, the extent that it's like individual like Japanese people versus they're putting their money in Japanese financial institutions that end up investing more in US instruments, it's probably a lot more of the latter than the former. Um, but no, I think overall the US tends to have um people tend to, especially, and I wouldn't necessarily call Japan one of these, like in economies that have less stable floors, tend to go tend to look to the US, and the US stock market having the best reputation. Um, but the US also isn't what it once was. Our credit rating just got, pulled down. We do have a lot of debt. So, while that has historically been the case, we might see less of that if we do see kind of a global recession, global financial problems.
And so you brought up the debt, and I do want to bring that back up when we talk about crypto. So chat, remind me when we bring up our crypto topic at the end. But I want to go to Warren Buffett now, who, it's funny, we have a short on our YouTube channel a year ago talking about this exact scenario where Warren Buffett sold nearly 50% of his Apple stake. As you mentioned, the cash pile is insane that he's sitting on, over $277 billion now, sitting on the sides. I think the Apple situation is complex because it was such a big portion of his portfolio. Obviously, him selling 50% just can't be viewed as like a good sign, but I think in the Berkshire Hathaway portfolio, it was up to a 50% uh, weight in their portfolio. So now, even if he sold 50%, it's down to 25%. Still a big portion, but what do you make of the whole story of Buffett, holding a lot of cash and also selling a lot of Apple?
Well, I mean, we've been talking about it, especially in reference to Apple not having the same kind of growth or innovation or anything. So we've actually, yeah, been talking about like Buffett potentially souring on Apple for a long time. So I definitely think, that we've seen this day coming, and I think part of it is clearly that he has macro concerns. But I think previously he might have viewed Apple as something that could like weather any crisis and just leave your money in. And even if the market is down on the whole, like Apple's going to do better than the market. He clearly doesn't view it that way anymore because of their core business just not growing and in some places shrinking relative to where it was. We said this, they're not really doing innovations. And we talked about, especially like the VR headset that was going to be in reference to Buffett. And that was like an important product. And even the car that's now been abandoned, that they'd have to show more in terms of the potential future growth and able to, keep investors like Buffett interested, keep them interested in saying that they're going to beat the market in, whatever conditions. So I think we are seeing some of that. But I think also some of it's not personal to Apple. He's been selling stock. I think he is worried about the economy for obvious reasons. Like, we can see why he's worried about it. For all the reasons we've mentioned, the jobs market, us leaving interest rates a little too high for too long, some geopolitical worries, although he wouldn't really go as much about that. But you know, the election uncertainty around there. But I think Buffett is much more of like a macro. Those short-term things might be kind of the nails in the coffin of like, okay, too much risk. I'm even more confident the market's going to go down. But in looking at like, the yield curve staying inverted for so long, I think there's a lot of like macro things that people on the macro side look at that say, hey, it's only a matter of time. And Buffett might be looking for more, has been seeing more and more of those things. And then kind of the instability to boot. I think it's easy to see the story of why. And I mean, if you look at it this way, like the fact that he's selling kind of being as an added catalyst to everyone else like panicking that much more, it shows how we're kind of in a different paradigm of everybody being worried about the market because everybody's been talking about like Buffett selling, going to cash for 2-3 quarters now. No one's really cared. And now this news event over the weekend, it's kind of the biggest one that arrived over the weekend before the market crashed that much more, which just shows that the market is that much more tentative, that much more nervous, that much more willing to buy his story.
So you've mentioned many times in the stream about this story of Buffett missing investing in Amazon early when he was offered by Bezos. Now that he's holding so much cash, I've heard people talk about how he actually can't find opportunities because Berkshire Hathaway is so big. He can't be investing like in these small companies. So he wants to find something, a big company that's attractive to him. So if we get a broader pullback in the market that continues and the giant tech companies fall into the Buffett zone of value, if you had to predict which one company he would look to buy or add in that environment, Amazon, Nvidia, any of the ones he doesn't own yet, Meta, which do you think it would be?
Which one? Let's see. I think I think Amazon probably in this environment. I think just because I think in he kind of he kind of likes more than anything, and this kind of speaks to Apple, a stable market position, right? And Amazon, like, Nvidia is a great company, but they're they're really betting on this market share, and they've held it for a long time, and they're banking on continued growth, and like all of those are bigger risks than Amazon, which has its core market. It continues to grow. There's no real threats to it, and it's moving into, unlike we said about Apple, it's moving into like a healthcare business that I think is going to be hugely profitable. Like there's other businesses, even if you're talking about like the kinds of things they're doing in drones and potentially in the shipping, like, Amazon is so good at increasing their moat, their foothold on their existing business and expanding into other ones. So that would be my bet of a new Mag 7 company if there was going to be one that he went into. Maybe Microsoft a close second, if he's really buying their story that they can unseat Google to a certain amount. But even that is more of a question than what I just mentioned with Amazon.
Well, I know him and Bill Gates are friends, so maybe we'll see that in the future. And I'm sure this will make it short, so we'll have a prediction and we'll see if it comes true over the coming year or so. We have a story about Elon Musk. He actually was speaking on a podcast, and he mentioned this about him possibly joining a Trump government-led efficiency commission, where they would look to reduce government regulations and laws maybe that don't apply. He's spoken about how laws and regulations have no end date, so they kind of just pile up over time. What do you think if this were to happen, that would mean for Tesla stock? Obviously, he runs so many companies already. Adding another thing to the board, I think the attention that his limited time and attention that he could give to all these different companies, investors have to start worrying about it to some extent. But how do you feel about it?
How do I feel about it? I think that like what we're already seeing with Tesla stock and the rebound is people betting on a friendly Trump administration, right? And as we've seen, like, the polls be a little more uncertain, uh, I think we've definitely seen Tesla stock do worse. And I don't think that's a coincidence. And I do think, like, they're already public overtures, the super PAC donation that Elon Musk gave, like it's increasingly public, and Trump mentioning Elon Musk specifically in his, crypto speech. I do think we're seeing more and more evidence that those two are going to be very aligned, and Elon Musk is perhaps going to have some power in the Trump administration, or at least influence. And I don't see how that couldn't possibly be good for Tesla stock, even if nothing's happened yet, even just at the anticipation that, I think the moment Trump, if he wins, like I expect, the market to do well, and I expect Tesla stock to do even better. And then, obviously, if there's any official legislation as it comes out to self-driving or anything that would work well for Tesla, I think you're going to see more booms, but I think you're going to see runs in anticipation of that. And I have a hard time, it might not be immediate, but I have a hard time seeing a whole Trump administration where we don't see some friendly, Tesla EV legislation come out in return for, all of Elon Musk's loyalty.
And you've mentioned before that one of his best skills is the ability to like work the political system and kind of speak to a lot of people. So maybe this type of story and him saying that is kind of a show of faith, and him doing that and acting in that way where he's able to kind of play all fields and realms and help Tesla and his companies.
Yeah. I mean, I think that, in the past, we've seen things like him getting direct to consumer rights to sell direct to consumer and circumvent the car dealerships. That's something that we've never really seen in the American car industry, or haven't seen for a very, very long time. Then, there's the way he got this like supercharger network when, even companies like, Ford and GM couldn't do it. And they're like, much more entrenched. They've got these bigger dealership relationships, with gets you kind of like relationships in local politics. Like Musk is very, very good at greasing the political wheels. And I think, you could say that this is just an extension of that. Sometimes doing good things in politics is knowing who to align yourself with, picking winners before they're necessarily as obvious as winners. And it looked like that was a slam dunk before Biden dropped out. Now, Trump is still a favorite, but it's just, not as much of a favorite as he was before. And yeah, I think Elon Musk is very good at playing, the long game. And for a while it looked like maybe he might be hurting his, like, hurting sales and things like that. But at the same time, no matter how much people might hate him, if he's got the only legit self-driving option, I'm sure some people that, grew a little tired of him might change their minds. Nothing heals wounds like a good product that you can only get from one place. We talk about it within the sense of Amazon, right? Like, a lot of people speak out against Amazon and their practices and warehouses and all that stuff. You don't really see it hurting sales very much. So there's something to be said about a product that doesn't have a match, doesn't have competition. And, even if people are speaking out against it, a surprising amount of people will stick with it.
Now, we kind of spoke a bit about the chip landscape and AI landscape before. Obviously, NVIDIA dipped under 100 this morning. Let me actually check right now. Let's see where it's at currently as we're starting this topic. I'm assuming it's going to be well off those lows, but let's see. NVIDIA is currently at 101.70. So yes, it's up about 10%. I think I saw it at like 93 this morning. In the newsletter yesterday, you mentioned or you shared how James Anderson, who was an early investor in Amazon and NVIDIA, here's a little bit of hopium for the NVIDIA bulls out there, said by the end or from a decade from now, he believes it's not out of the realm of possibility for it to have a $50 trillion market cap. So do you personally think that's possible in a decade from now? And maybe if we had people who tuned in after you shared your AI thoughts, just, share them again quickly so they can get a little bit of that for today.
Yeah. Anything's possible. It's one of those things where NVIDIA, has this market dominance, and they continue, even though people have been trying to rip them off for years, they continue to have the dominance. So I don't necessarily ever write them off. But they got work to do. They got work to do to keep this stuff up. And I basically think that in terms of what we're looking at on the chip side versus AI, is like, I think when people say AI is a bubble, like, I think they're really wrong to talk about chips, right? Because NVIDIA has posted close to 250% growth quarters year over year in a row. That's absolutely insane. Those are the best quarters I've ever seen. And we always put in context, like Amazon, the best growth story I've seen of our time. Its best quarter in the last 15 years is a 59% growth. So there are very real chips being bought. And I think the distinguished thing here is, like, AI products might not be out yet. They might not be making tons of money. They might not be there. But there are very real chip orders for the R&D of these products. And money keeps going in. Like, the other thing that I shared in my newsletter is there's starting to be a joke at Y Combinator, which is the biggest, most famous startup accelerator, that all of their graduating companies are AI. So whether it be early stage, whether it be, these chip orders, carrying up, not just NVIDIA, but companies like SMCI and even smaller ones. You look at ON or Wolf, companies that we short, even they're growing, at rapid paces. Anything, that even touches semiconductors. Their stock price, at least, is going up. And that's a result of, very real, Broadcom's another one. That's a result of very real orders being placed. And as fake as you might think AI products are in terms of how much they'll actually help people today, the money going in to finance them and the very real chip orders that are needed, even at the R&D phase, even if products are not ready to launch yet, you have to be able to see that difference. And that's a very important difference. And that's why we like chip stocks through this, even though some of the AI plays might not be the best timing for them.
So broadening out the topic a bit more macro, maybe it's a lack of experience for me, and maybe some of our chat and viewers feel this way as well. I feel like there's a lot. Well, I guess there is a lot of uncertainty, but the competing narratives of the economy and different signals and different pieces of data. I don't know if you could speak about if this is kind of always how it feels when investing and in the stock market. There's never certainty. Maybe we just have a bit more uncertainty than usual right now. But we have the twos to the tens yield curve uninverting, ending the longest period ever, which was 2 years. Now, normally when yield curves invert, it's signaling a recession, if I have that correct. But it remaining inverted for this long and then finally uninverting, how does that make you feel about the macro, the economy? And to that point, like I was saying, with your experience in the markets, is it always difficult to read kind of how the economy is doing? And are there always competing signals and different theories and theses going on in the markets?
Well, I mean, I think we kind of referred to it like there's always there's always going to be like your traditional market equation, things like the yield curve inversion, but you know, people basically said um people were worried about it staying inverted for so long and that being, a bad sign for the economy, but when it does uninvert, that tends to be the thing that, you know, drives the market down. Um and obviously bad day today, but recovered a little bit. Actually, I think we might be up since the actual inversion because I think we were down before that. Anyway, um, or inversion reversal, I should say. But it's always, you always have uh kind of to look at market history and what's going on currently in the market. And personally, and a lot of models will do this too, and where I kind of draw some of my own wisdom from, I would say that current data is always going to be more important than old historical patterns. But you can't ignore history, and a lot of the times, history does repeat itself. Granted, one of the big things that we've been saying this year, right, is that, bull markets normally have more market breadth. And we didn't see that. And we saw AI continue to carry the market, right? Now, people were just like, oh, rotation. And we're actually, I haven't looked at the IWM today, but last week the IWM did definitely worse than the other indexes, 2.86. Let's check it versus the QQQ. Yeah, so it's down more than the QQQ right now, which was true last week, right? So even worse than tech, small caps are getting hit. And I just think that's the reason that we keep talking about. I think, traditional patterns definitely state that actually in bear markets, a lot of the time, smaller cap stocks do well. And then also in bull markets, there tends to be more breadth. So that's an example of like, if you looked at a classic pattern, it would have said small caps should have caught up a lot earlier this year, and they didn't. So, and we were just basically also kind of saying, oh, there's a new pattern here. And we think the new pattern is that like AI, especially as it relates to chips, is something that's going to be a lot stronger. So, we were right with that new pattern, even if the strong pattern's old. And, we kind of, we're leaning into that. And like, it does look like it was good that we held SMCI, even though it was down 14% this morning. It has stayed up, and like another tech short I had, CRNC, has stayed pretty similar to where it was at open. So like that's kind of like some more, we had like kind of the broad data on it, and then some circumstances of a long short that we did that ended up, applying towards our overall thesis. Where just that, yeah, we think there will be more opportunistic buys of these chip companies than there will of the small caps, because part of the thing about small caps is they don't offer the same returns. They don't offer the same profits. You're buying on the future, right? And I don't think people are going to be as excited to buy on the future, when you do see good growth. Like that's what we say about these chips companies, especially. We're seeing very strong growth from them as well as very strong profitability. So why would you, in the opportunity to buy a company that might be hit a little bit with very strong growth and very strong profitability, why would you just buy the company with very strong growth? And that's what we've kind of seen all year. And that's the pattern we expect to keep seeing.
Now, one thing I forgot to mention when we brought up Nvidia before was that their earnings are actually later than most of the companies are reporting, towards the end of the month of August. I think we've kind of hinted that the election could be kind of the timeline when the volatility subsides. Do you think if Nvidia reports another insane quarter, that maybe that timeline could be moved up, and that could be the point in which the market kind of ends the volatility that we've seen and begins higher again?
Um, I think I think when any of these chip companies report well, I think we might see a 1-2 day run like we saw with AMD, which is why we're going to have to be like, regrettably, we've been talking about this, a lot more sensitive, making a lot more moves than we normally would, because the market is just going to move more, and you have to be prepared to say, oh, bullish one day, bearish another. You got to be prepared to like take the direction of the market as it comes. And I expect Nvidia to do well. And I expect the market to look good for a few days after, but that doesn't change the uncertain political situation. It doesn't, like, we might see Trump come out again if he sees the market get too strong and say, something about, I'm going to let less Nvidia chips go over the border than even the new ones that they're making that are China friendly. I might even not let those go, and watch the whole market tank in the other direction. It's just, there's too much uncertainty right now that I just don't. I think it's going to be volatile for the foreseeable future, if not bearish. But I expect volatile, and volatile only because I think we'll still continue to see good earnings. If the earnings turn, I think we will definitely see bearish. But
And
at this point, I should say, at this point, if we've seen 78% of the companies beat, rarely do you see that turn as much as you might need it to for the earnings to be the catalyst to carry the market down.
mm-hmm. And speaking of volatility, we're about to get into crypto, but we've come to the point in the stream where this is going to be our last topic. So I'll let everybody know watching now. We've had over 1,300 people tune into the stream. So thank you all for joining. Uh, Feel free to comment if we haven't talked about anything that you wanted to hear today on the stream. We're happy to talk about it. So get in your comments now. I see we have 20 people watching on YouTube, but only 7 likes. So let's hit double digits. 10 likes on YouTube today. I'll be checking in on that as George is talking about our next topic. So like it up, folks. But yes, so speaking of volatility, crypto last night I think got nuked, maybe because the market was panicking, but the markets were closed. So people were just like, anybody who invested in crypto kind of spiraled. Ethereum was down over 25% on the day. Bitcoin is down over, well, this was before they kind of recovered throughout the day so far during the market, but it was down 28% in the past week. There's been this narrative about Bitcoin being digital gold, which people flock to in times of uncertainty and stress, but it didn't seem to play out that way this time. Crypto just seems like, if the market's volatile, crypto is that times too. So I don't feel like you could have very much good things to say about crypto in this economic environment right now.
Yeah, I saw this morning that gold was beating the S&P 500. So I still think that gold is the gold. Like, I think that, people in crypto, I think, want to sell it as so many things. And like, I think that's the problem that some don't even realize when you're talking to a layman about crypto. Like, I've been a fly on the wall about this, and like, I probably sit in between in that, I think there's problems with the market structures, and I talk, um there's not transparent um options markets, so you can't really see where whales are making their more important, more profitable levered bets. So I think that structure, until there's some kind of options clearinghouse like there is in the equity markets, I won't ever trust the pricing's there. And I think, you hear people talk about it and they're always like, oh, it's this, it's that. And like, especially one of the things is like, oh, it's like democratized. Well, I don't think something is very democratized if there's non-transparent options markets and you can't even see where the wealthy are making their bets. So I think a lot of the times the way it's sold, people aren't doing themselves any favors, and especially online when they're just like the same. But I see it with like Nvidia and everything, just like these narratives of just like, oh, crypto's going to go up, like buy crypto, it's going up, everybody's buying it. Like, I think until people can start to sell it a little better, with like, some real like logic, I think there's going to be a sense that people that like it are just people that gamble. But yeah, and I think that like no, I don't think it offers the same kind of stability, because like another thing that I hear him talking about is it's just like there's like, oh, like if the world comes to an end, people are going to want crypto. It's like, really? If the power grid goes out, how are people going to access crypto? At least if you have cash, you've got cash, right? And you can trade. Maybe there's not going to be any real value to that, but like, you know, in almost every doomsday scenario I can think of, like computer or internet or key things that you need for crypto are going to go out. So that's always like a funny aspect to it, as well, where it's just like, okay, I think it falls short on a variety of things. But no, I don't think it's a good inverse. I don't think it's a good, store of value, because there isn't that trust, right? Like, and I think part of it is like all of these like crypto leaders that have gone to jail now for good reason, right? I think it was like 3 or the 4 biggest exchanges, like basically had issues with, like, people don't, when you have all of those like, like criminals that are at the top of this place, nobody's like, oh well, I'm worried about my money, where can I put it? Oh, this place that had a bunch of criminals running these exchanges. It just doesn't check out. It's just not what people want it to be. Like, I think it's very promising technology, and I think the blockchain, you know moving forward, done the right way, is incredibly promising technology. I think people just have to stop kind of overselling it. When is SMCI earnings?
I
I
just
want to
looked
look that
tomorrow.
up.
Tomorrow after hours.
Um, Probably not, but oh shit. Not only probably not, but uh, maybe I'll be getting out of it. I just saw net option sentiment go to 16.
We could be getting a
I might
live
be
move
looking for
here.
an exit.
And by the way, I was just looking at like a list of semiconductor stocks. Maybe one of the reasons we're seeing such a panic is Intel, possibly the worst quarter of any semi company so far, and plunging over 25% on their earnings. We can't let them go scot free without calling them out on the stream. Just not really riding the AI wave, or kind of operating as a lot of the other semiconductor companies currently are. I think AMD might be now, yeah, AMD bigger than Intel. Many of the semi stocks are.
Yeah, it's time to get out.
So, Jonathan, thanks for asking that question. You kind of sparked the live move in the portfolio, SMCI, and you got your answer rather quickly. I'm not going to be home
Yeah.
for earnings.
I kind of want to wait. I don't know if I want to wait for another reading or not. Like, that's such a low net option sentiment reading, but it never goes that low. Yeah, I'm doing it. No.
And I believe, if I'm correct, just because you're getting out of SMCI today to avoid, with the low reading and to skip the earnings, which you typically don't like to play earnings, if they reported a good quarter and you saw net option sentiment go back up tomorrow, you would have no problem re-entering,
Yeah,
correct?
definitely. I wish I would have gotten out when it was actually up today, but Can't win them all. Okay. Boy, the roller coaster of this market.
One of the more volatile times I've ever seen in my time in the stock
I
market
don't
so
think I've
far.
ever seen SMCI at 16 net option sentiment. That is brutal. All right, are we doing the crossover?
Yes, I think I don't see any more questions. I believe we can enter the Prospero Laboratory model portfolio update for everybody watching now. So we'll see George on the other side. Chat, it'll just be me and you for the time being. Oh, we do have a last second question. Do
I
you see
saw a
that?
question. If you get the paid investing letter, I have been making changes to it. Yes, but otherwise you don't get to see the updates. But I have made some updates. I've exited some positions. I'm trying to actually get to a point where I just keep less positions in the investing portfolio due to the volatility, like increasing the conviction. But I was still testing some things this morning, but have some bigger convictions now.
You're welcome, AS, for that answer. Okay, so it's just me and you, chat. Thanks everybody for tuning into this stream today. My YouTube likes call out did not quite make it. We are stuck at 8, so we need 2 more. So 2 more daring souls like the stream. Let's get to double digits. What's going to happen now is we're going to do the model portfolio update, and you guys will see the live moves that George is making. Kind of like how he just did, but you'll actually see his screen and his thought process and all of that good stuff. So it'll be really good to see, especially on such a volatile and red day, the moves and the signals that Prospero is seeing. I'd like to update everybody on the QQQ and the SPY net option sentiment when we do these switchovers. You know, it's been such a roller coaster ride in the markets. QQQ was as low as 0 last week and then as high as 50. So, like we were saying, roller coaster of markets. Let's look at where it is today. So the QQQ is at 4, so extremely bearish levels. Still, we're not seeing any type of real bounce in the QQQ net option sentiment since that Friday decline. And the SPY, which typically in recent months has been higher levels in net option sentiment than the QQQ, is now at 0. So the SPY is not holding up any longer. We are also losing the SPY in the net option sentiment. So also a bearish level we're seeing there. Maybe this market kind of reprieve we're seeing as it opened today will again be sold, and it'll be instead of buying the dips, it'll be selling the rips in the coming week. But we'll see how George manages the portfolio and if that's actually what we're going to be seeing. I mean, QQQ is now down 2.5% on the day. The SPY is down 2.5% on the day. And if you guys are regular viewers of the stream, we actually shared a stat 2 weeks ago how the SPY had gone, I forget how many trading days. It had been, I think, since the COVID crash where it had not dropped over 2% in a day, showing the lack of volatility in the markets. I kind of wish we'd go back to that way. Since then, I think we've gotten several 2% pullbacks in a single day. IWM down 2.8% and the Dow down 2% on the nose. So even though all the markets are coming back, not back to the even line, that would be great to see them show that much strength. We just looked at the QQQ and the SPY net option sentiment. QQQ was at 4, SPY was at 0. So I'm wondering if this bounce we're seeing in the markets, this little reprieve bounce, is going to get sold throughout the day, George. I wonder how you feel about that.
Yeah, it could. I mean, could be.
Thinking instead of buy the dips, it could be a sell the rips environment. But only time will tell.
Damn, we had some good We've been doing some good short buys lately.
I have to give 2 claps to our YouTube family on the stream right now. They got us to 10 likes, so thank you, everyone.
Here we go.
Yep, double digits.
All right, let's see. Let's get this letter going. No, we didn't do a full one. Let's do it on a day when we got a full. Yeah, talk about a yo-yo. Let's see.
Well, after the doomsday of the open, we've seen the market storm back a bit. So what is going on?
You missed it. I held for a second for you.
My bad. Someone actually called me on my phone, so I was wondering if my connection was still good. QQQ net option sentiment is at 4 and SPY at 0. Looks like the market is back to being hedged with SPY, or maybe SPY and QQQ. Nowhere is safe. We're seeing a continuation bet against tech, consumer discretionary, and communication. Some others have joined the party, like financials, which we've also been betting against. And energy. Looks like small cap and large cap growth are the targets, while mid cap has stayed stronger. We will target some mid cap longs. And look for some new small cap shorts as well.
We did some small cap shorts on Friday, and I'm glad we did. Those are the ones that have been just getting abused. What's our group? Wait, why is this? Oh, it's. I need to fix this. Oh, damn, we had a lot of SMCIs, but they're all gone now. No, I thought I ended more with Microsoft. Oh, well.
What a call out by Jonathan.
What?
Of SMCI, that question.
Yeah. Well, not that good. It's actually up. We didn't time it that well. But we followed our process. We can't be messing around. With anything like that. All right. Well, out of that, see, the issue is these are all open to midday. Oh, this is not going to be that easy. Or you know what? Maybe I can change this. We're changing this on the fly. A15. It's not right. Oh, I see. Okay. Well, we're going to have to do this the long way. Are comp are is comp wins? I think they are. Steven, are you still there?
Yeah, I'm looking them up right now. Calm, CALM.
Mm-hmm.
I think they're all closed, from what I see.
No, comp, COMP.
COMP. No, both lost right now.
How's that an option sentiment trend?
Comp is at 45 currently. It's basically flat in trend for the past about 10 days.
What's the net option sentiment? Well, I'm going to look at it on 10B. I'm liking this.
What do you think? Down at 18, spiking lower, but it was just higher?
Yeah, I mean, keep my eye on it. But I like that other stocks. I like it as a tech stock. Very. Not time to short Harley. CNET that small? I mean, it's a different CNET. Yeah, very small. Like this. All right. Now we're getting somewhere. Maybe one more. Now let's look. saw this. No, we're just rolling with this. All right. A lot of moves.
A lot of moves. So how are you feeling after making the changes? More bearish, more bullish than when we started the stream. What do you think? About the same.
I'm pretty bearish on the market as a whole, but not more bearish than when I started. But I'm net bearish. I've been net bullish for a while, so
Mm-hmm.
a bit different.
Well, it'll be interesting to see how this week plays out. If this gap down and kind of buying throughout the day can continue. But we'll be back Wednesday, 3 p.m. and discuss everything live then.
All right. Thanks
I'll
for
see you there,
joining,
George.
everyone. Yep.
Thanks everybody for tuning in. See you then. Have a nice day.